All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, March 22nd, 2022. So squeeze continuing again today. It appears that there was a lot more retail shorts to squeeze in the market, and it looks like either they were shorting yesterday into the moving averages. If we take a look here on the daily, you can see the triple Qs hit that 50 moving average there today, or excuse me, yesterday. Same thing on the spiders hitting that 50 and the 200 as well. And market able to get through that. Now, some of this may have been shorting yesterday. You can see we had that kind of doji candle. So looks like there was, maybe retail shorting it a little bit and then institutions pushing it back up. That's possible. Or it could just be, these guys just didn't get out of the way of the freight train last week. And now they're kind of late to the party in covering. And it could be kind of the last sort of shorts here in the market to cover. Take a look at the volume here, 64 million shares traded. We've got about 3 minutes left in the trading day. So a lot of this, covering does look like retail. And remember 2 weeks ago when all the FinTwit, geniuses were saying that, the dumb money were the ones buying the dip down here. And they had all these charts and everything to prove it. But, what were we saying here? We were showing you the bull bear ratios at unprecedented levels since really March 2020. They're showing you the option chains and all sorts of incentive for the market to get squeezed here. And now that we're getting really extended here on the daily chart, we're starting to see a little bit, at least I am, anecdotally, I'm starting to see a little bit of kind of bear anger. It was kind of, denial a week ago, like, oh, it's just a little counter trend rally that, they're going to, 440 is going to be the max upside. And now it's starting to break through and we're starting to see a little bit of anger here. So again, we're getting a little extended, and I think we're probably close to some type of a pivot here on the markets. And if anybody says that this is anything other than a short squeeze, then they're just plain wrong, or they're making stuff up, because this has nothing to do with the Fed's policy. It has nothing to do with inflation. It's got nothing to do with Russia. It's pure market mechanics, just like it was market mechanics on the way down that we were calling for a bottom here. It's mechanics on the way up. So this is all just short covering, and that's the way the market works. It doesn't always go off of the news, and a lot of time when it goes off the news, it's already priced in, and usually you're going to get some type of a pivot. Hence, why we were positioned long into the FOMC. Anyways, spiders here are getting close to resistance, coming into some levels I've got worked out here, but a nice breakout from this channel here. And market just had a really robust move here. Take a look at the Russell 2000. Told you guys around that 210 area is going to be an area of resistance here on the IWM. Haven't quite got there yet. Russell up 1% though, so a nice day. It's holding up okay. I don't see any problems, but that 210 area, maybe 212, if it really, gets a push, is going to be resistance here on the diamond. We're getting very close. You got this necktie here of the 200 and 100. Nice little channel breakout potentially there on the Dow. We'll see if it can get up there tomorrow, but market is getting a little extended here in the near term, and it's due for a pullback. But again, when there's shorts in the market, it can move higher, and that's what we're seeing now. And I thought we would, as there's the market closing there, but I thought we would get some type of a pullback at least on Friday, and we just blasted through that. But yeah, that's the power of a short squeeze. Anyways, here let's flip over to the triple Qs. So Q is also coming into a level. This 360 area is probably going to be tough. You got this gap window here. This is also kind of where you reversed and broke down. So that triple Q, has maybe a little bit more upside. If we get a gap tomorrow, I would see it probably fading off of that, all things considered. But take a look at stocks like Tesla today, just powering up almost 8% here. Basically getting up to that 1,000 handle. Let's see, it got to 997. So it got through that 100 moving average, but this is really stretched. And that tells you how many shorts were in it. But look at this big wide range bar after a move up like this. It tells you that there was probably some short seller capitulation here. And you are going into quite a bit of resistance here. So this is kind of where you started chopping. You couldn't break through 1,000, and now you're back testing it. And you got that 100 moving average there. So this is getting really extended here. But, again, like I just said, when there's that many shorts in the market, this can happen. I told you guys last week that this can get up to 1050, and look at where we are. We're almost there already. So Tesla, power move here off the lows. Apple getting through that necktie. That's a tough level to get through. That 50 and 100 moving average necktie, that's a tough area, and Apple just got right through it up 2%. This is very close to a resistance level that I have for it, though. Amazon, I thought this one would pull back today, too, but that wanted to go up there and test that 200 moving average. Look at this beautiful W bottom, by the way. Coming down here, back up, double bottom pierce, W. Now, if this can pull back and make a V, this could really springboard. I don't know if the market really can. I don't know if that's really in the cards here. I think there's a lot of problems in the market outside of Russia and so on and so forth. But nice double bottom there on Amazon. It is into a lot. It's a wall of resistance up here. But crazy move off the lows. Nvidia, I said, would pull back. That did a little bit, although it just kind of stalled. It wasn't. This market's not. We're not seeing a major reaction off of these levels yet. But a nice pause there for Nvidia, SMH, same kind of thing. Went up there and tagged that 200 moving average and then just pulled off the highs, but still finished green. IGV getting through that 50 moving average. Now you're kind of into this red bar high. So a lot of things coming into some levels here, and they're extended coming into those levels. So we're looking for a pullback here, but we're not sure if it's going to be anything more than that. We'll have to see what we get out here. We'll have to look for pattern, and we'll have to look for more clues in the chain here. Dow Transports, again, nothing really wrong, just kind of cooking in the oven right now. And this should get up to that 17,000 area on the daily time frame, but really no problems there for the Dow Transports. I forgot to talk about yields yesterday, so apologies there, but 10-year yield basically up to that 2.4 area. I think I told you that was going up there probably months ago. So that's where we are at now. 10-year yield just under 2.4. 30-year is just under 2.6. So that is very close to satisfying my second target there. High yield. So this is another, I talked a minute ago about, I don't know if the market can, or if Amazon and by extension, the market can really make another leg up here is, you got high yield. So this is still getting rejected at the 20 moving average. It did recover a little bit today, but if this can't make a higher high, that's going to be problematic. So keep this on your radar. Keep this on your radar for sure. And, the market's not just going to make all-time highs. That's kind of the sentiment now. We're starting to get there. We're already kind of getting there already. And it's only taken a week and a half, but the sentiment's already saying, oh, well, yeah, we can go. Who says we can't go right back to all-time highs? So the high yield debt says that. So just be careful. Watch this. If this starts to push higher all of a sudden and breaks out, well, then maybe, yeah, we can. But keep this on your radar because it's going to tell you a lot moving forward. Anyways, home builders, a little bit of a muted reaction here today. Take a look at the VNQ, though. This is a good pattern. So you have a, move up, stair step up, and now you have a little inside bar building. So this could be telling you that yields may be getting ready to pull back. I've been saying myself that they're extended. I didn't think they would take off this quickly. I was hoping to get in on them a second time. We played TBT earlier in the year and made some nice money, but yeah, I was looking for a little bit more consolidation or a pullback a week or two ago, but we never got that. And now they're getting really extended. But VNQ here should not be holding up with high yields. So maybe this is a bit of a leading indicator. Maybe this is lying and maybe it's going to fail. Well, that remains to be seen, but that's another thing to keep on your radar and watch. XLF here also getting through these moving averages as well. So holding up pretty nicely. It is into some resistance now, just like a lot of other things. Broker dealers also up into this old trend line here. You got the 100 MA there. Kind of these pivots up here, so maybe into a little resistance, and it is extended just like, again, a lot of other things are. JP Morgan getting through this 140 level, kind of in no man's land here. There's some sellers that came in this area. Maybe you can get up to that 50 moving average around 145. Bank of America, same thing, got those moving averages above that, and Wells Fargo getting up to the 50 MA before pulling back just a little bit. So we'll see what it does tomorrow. Energy. So energy, not a whole lot going on. Again, yesterday I said, yeah, it just kind of bounced off the 20. It's holding trend. Nothing really going on. We have to see pattern here again. Watch for lower highs potentially. XOP, same thing, although holding up pretty well. And OIH, obviously the same thing. Crude light, yesterday I told you that it was going to get up to probably a 112, 115. We got to 113.35. We did get a little pullback. There's nothing to say it can't get up to 116 or so, maybe 117. But watch for lower highs here. That's really all I can say right now. If it starts making lower highs and you take out these pivots, it's going to go right to 85. And there's a wall of sellers right here. There's a wall of sellers right there. But we'll see what we get in here in the near term. It does seem like each and every day, the conflict in Ukraine starts to get more and more priced in. But if any new developments happen, this can spike. So just be aware of that. But for right now, in the near term, we're just going to look for lower highs, assuming we don't get any more news. Anyways, nat gas, I was hoping for this one to consolidate a little bit more, but it did get a pop today. So I said, yes, this would probably, I would give this the upside bias here if it consolidates a little bit more. And it got a nice pop. So it did make a higher high, I believe. Let's see, 518, I'm not sure. Yep, 520. So it did make a higher high here. So again, this will probably go up here and attack this double top. At some point in the near term, it might need to do a little bit more backing and filling, but nothing wrong with that chart there. So that looks poised to make another higher high there. Dollar index, not really anything going on. Really nothing new from what I said yesterday. It's really all up to the weekly time frame at this point. It got extended and it's into a lot of resistance. Gold. So yesterday I said you don't want this to go sideways, and that's what it's starting to do. So we have a bearish inside bar here on gold. So very careful there. We may make another leg lower in gold. Same thing with silver, starting to put in kind of an inside choppy, sloppy consolidation there. Again, like I said yesterday, however, the good news is if you look at like the GDXJ, this is actually holding up okay. GDX, same kind of deal. SIL and SILJ holding up even better. So this is above all four major moving averages on the daily time frame. And it's putting in kind of a nice, have an up move and then a right angled pattern. So if the miners continue to hold up, that could, eventually negate this kind of pattern, or at least suggest that it's going to be negated. But if they start to break down for any reason, watch out, because gold will probably make another leg lower, as will silver. Platinum and palladium, same thing. You still have this inside bar here on platinum, although it's, come way off the lows there. And palladium also putting in an inside bar and kind of getting rejected at that 20 moving average as well. So be careful with that one. Copper, not a terrible move here. So come up here, we've got higher highs, and then a move, and now possibly setting up with an inside bar there. So it's early, but we'll watch this for pattern. You do have a wall of sellers that came in here, but it's holding up okay, and I don't really see any problems with it at the current time. All right, so flip over to the coins here. Bitcoin and Ether got a nice pop today. We talked about this pop here or this breakout potentially on Ether last week and yesterday, really, but nice little move up 3% respectively, 3.5%. Pretty much all the cryptos up nicely except for Ripple there, which is flat. But again, we're just watching this wedge pattern. Nothing really new happening here on Bitcoin until we either break through this or break down. But in the near term, it's giving us an upside bias here. Same thing with Ether. Nice little move there. That could maybe get up to that 3,300 area if it gets a pop. And then Bitcoin, we're looking for 47, 48 again. We could probably extend this trend line out, right to this area here. So it depends on where it goes. It's obviously an upsloping trend line, so the timing in which it goes up there to test it would matter. Change the level, obviously, if it were to get there. But again, no real problems here with the crypto market at the moment, so we'll just leave it at that. Outside of that, let's flip over to the spiders again, see where we close. I know we had a little bit of selling coming in towards the end of the day. Yeah, nothing really too major here. Did get a volume surge, but I wouldn't, make too much out of that. Tesla with a power move into the close. Yeah, spiders are into a little resistance. I'd be interested. So if we gap up tomorrow, I would think that we probably fade. If we start to put in an inside pattern and start to go sideways, well, then you already know we're setting up for another move here. But we'll see what we get out here tomorrow. Just because we had a nice move off the lows doesn't mean we need to be a cowboy. Don't be a cowboy just yet. The market's not telling us to do that. This is still a very skittish market. You need to be nimble in this market, and we could get geopolitical news tomorrow that can change things like that. So be very careful. Don't overload the boat one side or the other, short or long, whichever you're doing. Be smart, protect your positions. You guys know the drill. Anyways, guys, take care. Come find me at carnivoretrades.com, and I'll talk to you all tomorrow.